Well, I think the most important thing that people should know is that crypto is taxable. My name is Andrew Gordon. I'm an attorney. I'm also a CPA. I practice law and also do accounting for blockchain and crypto businesses, traders, and just people generally involved in the industry. I'm personally a nerd, and I've been interested in Bitcoin and blockchain technology really since the early days. I was following it. I don't even want to talk about how low Bitcoin was when I first learned about it, and even when I got my Coinbase account, which was years and years ago now. But I've always been very interested in the technology, and fortunately in my business practice, we've been able to do a lot in the industry and get involved with different clients. Since 2013, early 2014, we've been helping clients in both tax and just corporate law matters in the blockchain and cryptocurrency industries. So it's been very rewarding, as it's something that I'm personally very interested in, to be able to help people in the industry. I think Chicago's already on track to be, if not the blockchain capital of the world, one of the foremost locations or centers for blockchain. And I think there's a couple reasons for this. One, Chicago does have a very strong tech community. Although people don't always think of it, it is the Silicon Valley of the Midwest, at least in my eyes. So there's a very strong tech community. At the same time, there, for whatever reason, seems to be a convergence of people that have been involved early in on blockchain and cryptocurrency in Chicago as well. Even for years, there have been meetups that have grown significantly from tens of people to now hundreds. And Chicago just seems to have an excitement towards blockchain and cryptocurrencies, and we just constantly, every week, see different events, and many of these are free, not even trying to raise money, but just to inform the public about cryptocurrency. And I think this is very unique to Chicago, is the convergence of all of these different aspects together. Sure. So I actually started with the accounting path. I did my undergrad at the University of Illinois in Champaign, got a bachelor's in accounting, and then I got a master's in accounting also at U of I. And after having some experience in the tax field, I decided I wanted to go to law school. And so during law school, I passed the CPA exam, and then thereafter began practicing as an attorney. Well, I think the most important thing that people should know is that crypto is taxable. Just because it's decentralized or in theory difficult to trace, it's still taxable when you receive it as payment. It's still income. If you trade it or convert it to a different currency, that's just like trading or selling a stock. And so there's taxable events then as well. And so in general, in many of the things that you do with crypto, there are taxable implications. So although crypto is decentralized, what people often don't realize or forget is that in the US, it's a self-regulatory or self-compliance system where we are responsible for reporting on our tax returns properly all of our transactions. So even in theory, if the IRS couldn't find us, it's still our responsibility to report and pay the appropriate tax. But to answer your question, the IRS has actually invested and hired companies to trace through the blockchain crypto activity. And so although it's decentralized, it is very possible still, especially with the main cryptos such as Bitcoin and Ethereum, to trace activity. And the IRS has increased both their investments and enforcement action in these areas. So although it's decentralized, one, it doesn't get rid of your own personal obligation report, and two, the IRS is still going to be able to track you down. I would say the most frequently asked question is if you have one cryptocurrency and then you buy another one, is that taxable? So most commonly, if you go from Bitcoin to Ethereum, you don't necessarily sell the Bitcoin to cash, but you just buy Ethereum with Bitcoin, is that taxable? And although people hate the answer, and although people fight with me every day about it, most practitioners in the area Those that read the tax law believe that it is a taxable event. It's the same as selling your Bitcoin to cash and then using that cash to buy Ethereum. Similarly, you use Ethereum to buy into an ICO. That is also potentially taxable. You have a gain or loss on the purchase of that ICO. So again, a simple way to think of it is that you sold the Ethereum or the original cryptocurrency for cash and then use that cash to buy the ICO. Especially now that the market isn't as high as it was in November and December, this has been causing a lot of trouble for people because they've got significant gains at the end of 2017 when the market was very high and they are trading. And now that the market is lower, they don't want to sell in order to pay their taxes, but at the same time there's a tax bill, and many people that were trading at the end of 2017 didn't sell to fiat, but rather just converted to different cryptos. Sure. Well, I think just aside from cryptocurrency itself, the blockchain technology is something that even just in accounting and in law, just with very simple things like property deeds that can implement blockchain technology so that we're not going to a recorder of deeds office and pulling files. Just simple things like that. I think there's going to be significant purpose and implementation of the blockchain. In the area of cryptocurrency, being able to send money quickly across the world, and also for those that are unbanked or are not able to open bank accounts, it provides a means to store wealth and acquire wealth and then also transmit it. And there's many people in the United States and in the world that do not have access to banking or can't open bank accounts or credit cards. And so in those types of situations, it also provides a good solution. Another big misconception is that the IRS hasn't ruled or issued guidance on cryptocurrency. And the reality is that back in 2014, the IRS issued a notice that said that cryptocurrency is not currency, but rather property. And the classification as property led to now the treatment of capital gains, short-term and long-term capital gains, and being able to deduct losses and so forth. But one of the results of this also is that, for example, when you buy, if you were to buy a Lamborghini with cryptocurrency, that's taxable because it's not a currency, it's property or an asset. So the IRS in many areas of cryptocurrency has already issued guidance, and those areas that individuals feel still remain vague, there are other areas of tax law that can be applied to crypto. So although crypto is new, before, 20, 30 years ago, there weren't credit cards, but the law was interpreted to apply to credit cards. And so similarly, we can look to other different examples and apply those same types of facts or same types of patterns to cryptocurrency. So in the areas of stock trading, there's a lot of similarities to crypto. And so as practitioners, often, although we don't have absolute guidance on crypto, we have guidance on other similar things such as stocks. The IRS classifies cryptocurrency as property versus, for example, being classified as a currency. And since it's classified as a property, you do have to pay attention to things such as capital gains. Or when you use it to purchase items, there's a gain involved in that. When you use a dollar, although the dollar changes in value relative to gold or other currencies all the time, if you purchase something with it, there's no taxable event. But because the IRS considers cryptocurrency to be property, more akin to something like gold or just any physical property, there are gains or losses every time it's converted or sold or used. So yes, based on the IRS in 2014 classifying it as property, all of the capital gains and losses need to be considered. Sure. So I think it's actually a misconception that the tax policy is not very clear. Sure, it does not directly address every question related to crypto directly, but there are very similar other examples that have been decided in tax court and in tax law that can be applied to crypto. One example is in the area of forks or airdrops. Now, of course, the tax court has never ruled on that. The IRS may never directly rule on the issue of forks, but we can look to other similar laws or cases that have occurred. And so one area in the issue of forks that people have looked to is laws or cases regarding found treasure. Or when you receive something you might not have necessarily wanted or asked for, but all of a sudden it arrives at your doorstep. And so very similar with forks, no one asks for it, but you all of a sudden receive something, or with an airdrop, the practice that the IRS would generally use is that this is income. If you found treasure in your backyard, that's income to you. So although even in this area the IRS hasn't directly ruled and said this is taxable, what we have to do is put ourselves in the IRS's shoes, and once given that fact pattern, try to decide how the IRS would rule. And what we've seen is they've ruled in certain ways with very similar fact patterns such as treasure, and so we think they'd rule the same way with forks in cryptocurrency. And ironically, applying old case law to new things that pop up has been occurring for generations. And because with every new technology, people think, oh wait, the law needs to be changed. In most cases, it's just going to be interpreted with the new technology. And another example along those lines too is for decades, cash was king. People didn't have credit cards, and it was very difficult for the IRS to trace cash transactions. Someone could be holding millions of dollars of cash under their mattress. Nevertheless, there was still the obligation to report. Cash is not necessarily traceable, much like cryptocurrency, but still you had to report, and the IRS found means to audit individuals and trace that cash, even though there's no direct history of it, such as with credit cards. I think cryptocurrency and blockchain technology and accounting, there's going to be a couple different ways that it's going to be impacted. One, I think the accounting industry as a whole is going to adopt blockchain as a way to have a more secure ledger that doesn't necessarily have such a need for audit. The audit industry in itself is based upon the need for examination or distrust in ledgers, in recording systems. And so I think the accounting industry will begin to adopt a lot of these things, as businesses do as well. In terms of taxes and regulation, I think a lot of these areas that people think are not very clear, we'll start to see cases of enforcement where the IRS goes after individuals for failure to do certain things, and then it becomes very clear that, hey, wait, we all really had to do this. And so I think we're going to see more enforcement, some more clarity in some of the guidance, but I don't think that there's going to be any significant changes, meaning crypto to crypto, I don't think that will ever change from being taxable. But I also do think exchanges are going to be more involved in the reporting process and make it a lot easier for the users to report their taxes. One of the biggest difficulties now is that taxpayers don't have necessarily all the records all the time in order to report all their crypto gains properly. And this is because exchanges disappear, don't keep good records, whatever it may be. And so I think we're going to see more of an obligation on them to issue reports, just like investment firms or brokers have to issue you forms regarding your stocks on a 1099-B. I think we're going to start to see in coming years crypto exchanges doing the same thing. I think at first blockchain is going to impact our everyday lives in more subtle ways. For example, being more in the back end in terms of providing the ledgers or the ways to store data or information, and just things that occur every day, you know, property ownership, medical records, and things like that are less intrusive but have strong value. And I think that will probably be some of the first phase of blockchain adoption. And then from there, I think we'll start to see more unique ways that it could be implemented. But I don't think it's going anywhere. I think even independent of cryptocurrencies, blockchain is a technology that's going to impact us during our lifetime significantly, and time will tell as to how it will do that. People can learn more about Gordon Law at gordonlawltd.com, gordonlawltd.com, or tweet me on Twitter At accounting. Easy to remember. At accounting.
You have ad accounting?
I have at accounting.
That's awesome.